It's emotional consumption. These are things that make us happy. I would love to say that I need a new Hermes bag or Ferrari, but in the end, it's really something that I want.
Die Geldmeisterin. Der Finanzpodcast. Mit Julia Kistner.
Hallo, liebe Geldmeisterinnen. Auch Lust auf lukrativen Luxus? Auf L'Oreal, Hermes, LVMH, Essilor Luxotica oder auf eine Hilton oder Marriott-Aktie? Am Mittwoch habe ich in der Börsenminute bereits verraten, dass ich mir LVMH-Aktien im Juli gekauft habe. Und nicht nur das, auch Anteilsscheine für L'Oreal, weil sie endlich mal etwas erschwinglicher waren. Aber der Preis macht sie noch nicht heiß, sondern die konstante Nachfrage, die Preismacht, die hohen Margen und die neuen digitalen Absatzkanäle, die in Zukunft weniger luxuriöse Verkaufstempel erfordern, was den Margen noch besser tun könnte. In jedem Fall wächst die kauffreudige Mittelschicht, die nicht jeden Cent umdreht, sondern in Prestige-Marken investiert, speziell in den Schwellenländern in Asien. Aber das ist natürlich nur meine ganz persönliche Kaufentscheidung, keine Kaufempfehlung. Hören wir uns doch besser einmal die Argumente von Gillian Diesen an, die sich bei der Fondsgesellschaft Pictet um den Premiumbrand-Fonds kümmert.
Yes, I'm Gillian Diesen. I'm a client portfolio manager at Pictet Asset Management, and one of the strategies I cover is the premium brand strategy.
These premium brands have a good trend right now. Is it because of inflation, so that people like luxury brands more, or is it even though there's an inflationary trend?
I think even though there's an inflationary trend, I think there's still a strong thirst for demand. There's still a relative lack of penetration of premium brands and of which luxury are some across emerging markets. So there's still quite a long runway to go. But of course, they do offer a certain store of value in inflationary times. Really, luxury brands and premium brands, it's really about emotional consumption. So it's not always rational, these things. These things are things we want. They make us feel happy and so really this is part and the parcel of consumption of these kinds of luxury products.
This also was the case in previous crises like the tech bubble or the financial crisis. Did you see the same trend?
Not necessarily. I think there's been quite a few different ingredients into where we find ourselves today. We've had a couple of years of lockdown where people haven't been able to spend and consume on these premium brands that they've wanted. And we find that more and more when a population is constrained, they really come back with gusto afterwards. That's something that we're seeing with this real reopening, helping to fuel demand for premium brands. But then also we're seeing premium brands, of course, really catering to that segment of the population that perhaps has been slightly less impacted by some of the economic challenges of late. And we've also seen in this time of constraint, people actually benefiting from some additional disposable income, which they're now spending on travel and luxury and premium brands.
So they want to do themselves something good and therefore they buy these luxury brands?
As I said, it's emotional consumption. These are things that make us happy. I would love to say that I need a new Hermes bag or Ferrari, but in the end, it's really something that I want.
Oh Lord, won't you buy me a Mercedes-Benz?
And in which part of the world you see now a rising demand on luxury brands?
Really, areas of growth are in particular emerging markets. China, of course, is a major market for premium brands. But interestingly enough, so far year to date, the US has been extremely strong in terms of their premium brand consumption. But certainly for growth, yes, China is extremely big and emerging markets more broadly.
And why do you think it's so strong, the demand in the USA?
We've seen, I think, the consumption of premium brands have a bit of an uplift in the US specifically this year, partly because of the dynamics I was mentioning of the last couple of years and slightly higher disposable income potentially for some people, these constraints, but then also some very structural things, I think, at a premium brands level, in the sense of really seeing many of these companies being forced to shift more and more towards digital over the course of these last couple of years. And as a result, open up really new markets for premium brands in terms of, for example, in the US, the geographical middle America, so not just the traditional catchment areas for premium brands, typically on the West and East Coast, but these areas far from typical flagship stores. So in Colorado, Arizona, and such places where we've seen growth, partly because of that digital shift, but we've also seen perhaps a growth in consumption from Gen Z and younger generations who've also been benefited, I think, from this digital shift, where instead of having to ask someone to drive them to a flagship store, for example, they now have access to these premium brands really at the touch of a smartphone. Digital is definitely a structural growth driver for premium brands in general right now. And it has been something that's really been key, I think, in fueling this uptick in demand for premium brands, because it's really been opening whole new markets and groups of consumers to premium brands that perhaps typically haven't been on the radar for these sorts of items. And of course, it's helped enormously during times of lockdown where people couldn't physically go to a flagship store, but instead could access these products online.
So did you find some brands are better in the digital marketing, so they gained and the others lost?
One of the key characteristics for us and how we define a premium brand to begin with is really that digital integration. So really, we feel that some of the best, most successful premium brands are really those that are omni-channel. They're not just brick and mortar, but they incorporate digital into both their distribution, but also their marketing, and so on. And this really is part of being a premium brand. And certainly, yes, over the course of COVID, we really saw luxury go online in a big way. Some 12% of luxury consumption was done online in 2019, and that was up to 22% in 2021, so almost doubled over the course of that pandemic.
Du kannst auf mich verzichten, nur auf Luxus nicht.
How do you define premium brands also in your fund?
Yeah, so what is a premium brand? Well, for us, it really is 5 key things. The first of this is differentiation. These are companies that are really excellent in differentiating themselves. They tend to have very strong, long heritage. Many of these companies have been around for a very long time, and they build on that heritage over time, innovating constantly. Take, for example, Moncler, which started out really producing very high quality technical gear for mountaineering expeditions, and that is now a household fashion name, and an extremely successful brand after many decades. They have a platform of designers that produce very small capsule collections on a very frequent basis, and it's a really good example of that constant differentiation and innovation. So that's the first. The second criteria is experience. Premium brands offer much more than just a product or service. They really offer a whole experience, an ecosystem. It's about the purchase experience, the after-sales experience. Just think perhaps of an Apple store and the interaction that you have in an Apple store, or indeed a company such as an LVMH or a Kering that really create brand ecosystems. I can go to a Belmont hotel, sip Dom Perignon champagne, have my Louis Vuitton luggage, wear my Tiffany jewelry, all within that ecosystem of LVMH and that brand. So it's really about an experience, not just a single product. The third thing is brand integrity. Many of these companies really have been around for a very long time, some of them going back to the 1700s. If you think about a Rémy Cointreau or a Louis Vuitton, for example, these are very long-standing companies. So they really have a strong commitment to responsibility. They want to safeguard their legacies, their reputations, and really think about the next chapter of their business. So they tend to be very controlled when it comes to supply chain management, when it comes to distribution, and really part of that is really safeguarding that brand integrity so that it continues to be a long-running business with a strong reputation. The fourth criteria is digital integration, which I mentioned before. Really the most successful premium brands, I think, are increasingly omnichannel. It's about integrating that digital into marketing, into distribution, and really being omnichannel more and more, and having a sort of more data-centered supply chain as well. So that digital is extremely important when we're talking about structural growth of these companies. And finally, it's about operational excellence. These are the sorts of companies that tend to have very superior pricing power. They have superior margins and cash flow generation to many of their peers or many other companies that you might find in the broader consumer discretionary space. And they tend to have extremely strong balance sheets. Many of them are net cash positive. This really is the hallmark of this operational excellence of a premium brand. So when we're looking at a premium brand, we find premium brands across the consumer space, not just consumer discretionary. Mm-hmm. We find them in travel, in leisure, in cosmetics, in food and drinks, in sporting goods, as well as apparel and accessories. And really, these premium brands have these 5 characteristics of differentiation, experience, brand integrity, digital integration, and operational excellence.
Are they very solid investments then?
I think they tend to be quite solid investments. Of course, as I mentioned, many of these brands have extremely strong histories, strong heritage. I think it arguably takes quite a bit of time to build up the kind of story and brand that goes with a premium brand, especially if you're looking at the luxury segment in particular. So they tend to be around for a long time, and I think these characteristics that we're looking for as hallmarks of a premium brand also lend itself to some extent to a certain amount of relative stability over time for these kinds of names.
Especially China tried to create premium brands. Did they fail to compete with these old European and US brands?
There are certainly some Chinese premium brands out there today. I think for the most part you might find them more in the sporting goods and cosmetic spaces. It does take, I think, especially for luxury, quite a long time to build that heritage and that brand over time. So one tends to find perhaps a little bit less in the luxury space in these areas, but you do find them, I would say, certainly across, food and drink, sporting goods and cosmetics. But perhaps for the moment, I think the real icons of luxury continue to be for the most part European, and they certainly adhere to those 5 characteristics that I mentioned before.
Shine bright like a diamond.
Do you have any characteristics for the shoppers of premium brands?
It's tough to define. I think they have a very broad-based appeal, especially perhaps going back to your first question, in a more inflationary environment. I think a lot of these luxury items are seen to be, to some extent, stores of value with value that increase over time. So that's something that might be interesting and have quite a broad-based appeal. I think you also have more and more brands catering to perhaps new markets, not their traditional core market. So you see, whether it's yoga or cosmetics for men, in spaces that have typically been dominated by women, but the reverse can be said in other segments as well. So it has a broad-based appeal. I think in the more emerging markets, also you're looking at strong representation from younger generations, from Generation Z, for example. These younger generations that are perhaps more sustainability inclined, they want products of good quality that last. They also want this aspect of individualization and something customized, which is often found with premium brands as well. And yet, conversely, at the same time, they offer a sort of sense of belonging, perhaps to a certain social group or whatnot. And of course, have brands that are very recognized. So I think it's tough to segment the consumer per se, but they have very broad-based appeal. But certainly we're seeing, that younger generation coming to the fore.
From the investor's point of view, do we have now a good buying opportunities in the segment, or is it already too late?
I think these are really interesting long-term investments. Right now, in the short term, we've seen valuations of these sorts of companies really come down enormously. We're looking at valuations that are either below or in some cases in line, depending on the multiple you look at, with the long-term sort of 10-year historical average, which I would say is quite a compelling sort of level to be at for these sorts of companies that are extremely high quality, high profitability, very well established, have been around for a long time for the most part. Certainly, I think that's the case in the luxury space. You're seeing also some positive trends when it comes to reopening post-COVID for the food and drink and travel and leisure space, certainly in Europe and to some extent the US and China sort of post the very strict lockdowns in Q2 this year. So there are some positive trends around that as well. So I think, yes, there are certainly opportunities for investors today.
And are premium brands good dividend payers as well?
Even though premium brands really tend to generate very high cash flows and have very strong balance sheets, I'd say dividend yields are not necessarily their preferred use of cash. Cash tends to be more reinvested into growing the business or into share buybacks when there's too much cash to be absorbed. And as a result, these are really companies that have a lot of financial independence but also perhaps lower dividend yields than one might expect for the kinds of cash flow and strong balance sheets that they have.
Has this fund specialized in premium brands? What are the main picks there?
This is a strategy that tends to have quite a European focus. Luxury is at the heart of it, but it's really premium brands across the consumer space, so staples and discretionary, travel, leisure, cosmetics, sporting goods, but also luxury retail as well. It's when it comes to segments, I think sporting goods today are a little bit more challenged given their exposure to supply chain and logistics challenges that are proving quite tense today. They're also a little bit more exposed to the slightly lower end of the consumer. However, as I mentioned, luxury, the fundamentals seem to be extremely strong right now, with valuations that are more attractive than they have been for some time, with multiples coming down to sort of in line or below long-term historical averages, and some reopening trends continuing post-COVID in the travel leisure space, which also feeds into food and drink. When we think about going out more to restaurants, having more events, and picking up on that sort of pre-pandemic lifestyle that we see taking place. So there are lots of positive trends for really segments across the space, perhaps with the exception of sporting goods right now, where we see a little bit more in the way of challenges.
To summarize the whole premium brand discussion, what are the 3 most important reasons for you to invest in premium brands?
as before, those characteristics, those 5 characteristics of a premium brand, which really define a premium brand, are extremely important in terms of lending themselves to a certain element of stability over time. And in terms of lending themselves to this high profitability, strong pricing power, and really high quality of these companies that are very well established that we see in this space. So that's extremely compelling. But then I think, ultimately we're living in a world where increasingly we can get anything we want anywhere, anytime. And we have really the rise of economic growth and middle classes across emerging markets that is really encouraging the uptake of premium brands and a certain sense of a need for differentiation, which these premium brands provide.
Do you see also a rising demand for premium brands which are just digital, or is it always omnichannel?
In the way that we define a premium brand, they tend to be more in the way of omnichannel.
Okay.
But that doesn't mean it can't only be digital.
Do you think now we all talk about recession, and even just the question is how deep the recession will be? What does this mean again for premium brands?
Relatively speaking, this would be a portfolio that is perhaps slightly less or would be more sheltered, let's say, from some of the negative impacts of say, inflation, given the strong pricing power that these companies tend to command, given the strong control of supply chain and distribution channels for most of the segments found within premium brands, perhaps with the exception of sporting goods to some extent. And so that shelters them, I think, to some extent from some of these negative pressures of inflation and price rises and some of the logistical challenges that we've been seeing. They also cater really to the premium end of the consumer base as well, who might be slightly more sheltered from these economic challenges that we're seeing today. So relatively speaking, we would expect it to be a little more sheltered than perhaps some other areas or than the wider consumer discretionary space. That said, I think we're looking at an environment that could be fairly volatile in the shorter term, given the economic outlook and economic sentiment.
So for defensive investor, they're interesting investments right now.
I wouldn't pitch it as defensive. Typically the pattern that you see, and we can certainly see patterns given that this is a strategy we've been managing with exactly the same team for more than 15 years now. And as a result, what you tend to see is that in a time of crisis and sort of broader market drawdown, you see these sorts of companies really fall lower and faster than the broader market, but you also see them rebound quicker, higher, and more sustainably than the broader market as well. So I wouldn't necessarily call it defensive, but is it a little bit more sheltered, certainly from in the broader consumer space when it comes to these negative pressures of inflation and economic pressures, then potentially yes.
These premium brands, they often have a very strong core investor. These are families. Do you feel more safely because you have a strong core investor?
Everything always depends. We're very selective on our investments. It's about the characteristics of each and every single company that we examine, that we might include within our portfolio. It's not about a general, I think, statement across a particular segment or, across luxury, across cosmetics, or across a geography. It's really about the characteristics and the details of every single stock and the opportunities that it offers. I think if we have to say in general, then I think these strong sort of family shareholders are potentially part of the longevity of many of these companies. And so as a result, a potentially positive thing, I think it does perhaps add to this feeling of wanting to minimize reputational risk, and so have a certain commitment to responsibility and sustainability to ensure the longevity of the brand and the business. And that probably is helped by having some sort of core family-based shareholder, I would say.
Thank you, Gillian. This was really interesting and really helpful for all investors who are interested in these premium brands.
Thank you very much.
Über aktuelle Börsenaufreger und Ereignisse berichtet Werktag für Werktag übrigens die kleine Podcast-Schwester der Geldmeisterin, die Börsenminute. Überall, wo es Podcasts gibt, auf YouTube, Facebook, LinkedIn, Xing und auch auf www.geldmeisterin.com. Eine erfolgreiche Anlagewoche wünscht euch die Geldmeisterin und Julia Kistner. Und am Schluss noch der Disclaimer. An dieser Stelle wie immer der wichtige Hinweis, dass die Inhalte dieses Podcasts, der Videos und der Webseite geldmeisterin.com ausschließlich der allgemeinen Information dienen und die ganz persönliche Meinung der Geldmeisterin und von Julia sind. Es handelt sich keinesfalls um Investmentempfehlungen, Rechts- oder Anlageberatungen. Das Gesagte, Geschriebene und Dargestellte kann und soll auch nicht das persönliche Gespräch mit deiner Finanzberaterin ersetzen. Auch sind weder die Geldmeisterin noch Julia Kistner informiert darüber, wie es mit deiner Vermögenssituation ausschaut, deinen Bedürfnissen, familiären Umständen, deinem Finanzwissen, die Risikoneigung oder deinen Anlagehorizont. Anlegen erfolgt daher auf eigene Gefahr. Die Geldmeisterin und Julia Kistner haften nicht für Anlageentscheidungen, die aufgrund ihrer Medienbeiträge getroffen werden. Kurzum, für die Geldmeisterin und Julia Kistner war es immer ein Vergnügen, dich bei deinem Vermögensaufbau zu inspirieren. Auf deinen eigenen, persönlich richtigen Geldesel musst du schon selbst setzen. Viel Erfolg!